Episode and this lesson is about transition finance for farmers. If you're new here, why are we doing this? We've been following the regenerative agriculture and food space since 2011, and since 2016 we've been recording podcasts asking that our interviewees, which are farmers, entrepreneurs, most farmers are entrepreneurs, fund managers, investors, institutional investors, scientists. I'm asking the question how to put money to work to regenerate soil faster. And we decided after 90 interviews and more than 100 hours of audio, a number of Q&A webinars, Ask Me Anything webinars, etc., that it's time to share our lessons learned. And you're looking at the result of that. Is this course free? No. This is a pay what you think it's worth course, meaning that we've taking a lot of inspiration from the gift economy of Charles Eisenstein, and I cannot know what this course is worth to you and what it will be worth to you. And I also don't know, obviously, what kind of means you have at your disposal. So I'm asking you to think if this course has created or is creating value to you, and you have the means to consider paying what you think it's worth. If that's too complicated, just to give you an idea what I would charge, but again, this is not the price of the course. This is what I would charge to an institutional investor that would take this course online. I would charge around $400. But again, think about what this means to you, if you have the means, and what this is in terms of value, and consider paying that. This is not investment advice. Just to be clear, all the names we mentioned, I'm a small retail investor. I haven't invested in any of these companies and funds. I'm only a small retail investor in this space. So seek professional financial advice before making any investment. Having said that, I will always mention if I have a special relationship with any of these as an advisor or in some other shape or form. This is pure asking questions. This is pointing you to frameworks to use, people to meet, but please seek financial advice before doing any due diligence or making any investment. So what are we going to look at? We have looked at land, the previous episode, so buying land and regenerating it. And today we're going to look at transition finance for farmers. We'll look at the following in the next lessons. So what is transition finance for farmers? It's much more niche than buying land and regenerating it. That has been around for quite a while. We see large funds, we see large investments. It's much more of an established space. Transition finance for farmers. So partnering with farmers to help them to really be with them on the regenerative journey as they're implementing regenerative practices. That's something much newer, especially from the commercial side. There's been a lot of subsidies, actually not a lot. There have been some subsidies for farmers to implement certain pieces of regenerative agriculture, regenerative practices, but a whole suite of things has not really been there. So if you're stepping into this world of transition finance for farmers, you're stepping into a world of experiments and a world of small experiments so far, but I think a very exciting world. So exciting that we actually decided to focus an entire podcast series on that. So together with my co-host Benedict, who you can see here, who is a farmer in Eastern Germany who farms over 100 hectares organically, but definitely not regeneratively. We've been on a quest, and I think we're up to episode 9 as we're recording this, to see if we can find appropriate transition finance for his farm. He's been doing a lot of tests. He's been doing a lot of experiments. He's hosted all the gurus on his land. And now it's time to scale that from a few hectares to 1,000. And what kind of finance, if outside finance is relevant, what kind of finance would fit that? And that we've been exploring that. And I'll put a link to this series at the end if you want to unpack more of this specific transition finance for farmers in a specific case. But I think a lot of the lessons learned there are applicable to farmers in a similar situation all around the world. And what we've learned is that a successful transition, it's never done, but let's say a successful start of a transition of a farmer implementing more regenerative practices really comes down to 3 main pieces. And they need to be there, all 3. Like if you have only 2, it usually doesn't work. Very similar to if somebody implements no-till, but doesn't do cover crops and doesn't do complex rotations. It's very rarely that a farmer manages to really move forward. In this case, the 3 key pieces, and this comes from a lot of lessons learned from the Perennial Fund, which comes out of Mad Agriculture. I will put the links, as always, at the end of the slides if you want to dig deeper. And they really saw, and I think we see that in a lot of situations, that it comes down to support. Farmers need support. They need support of other farmers, peers that are on a similar journey. So they are not the crazy ones. They need support from farmers in the area that are on a similar journey. They need support from independent agronomic advice. Not very sexy, but most of the current advice farmers get is paid very heavily by input companies that obviously are selling some kind of chemical input. So we need to get farmers and help farmers with independent agronomic advice of people that are paid not by an input company, because naturally the input company advisor will sell more inputs. Just like any energy company or any fossil fuel company will sell you more fossil fuels. That's their incentive structure. So support by other farmers that are doing similar journeys and independent agronomic advice. Second, markets. They need access to markets. They need long-term agreements to buy the grain during the transition and after, if they go for organic, for instance. They definitely need premiums, but almost more importantly, long-term agreements. You cannot be active on a commodity market and pray the whole year for a good price and also work on your regenerative transition. You need to have long-term agreements. You need offtake agreements that you can build on, companies that are looking for specialty ingredients, etc. So don't underestimate how important the customer, in this case, companies buying ingredients, if we talk about bigger farms, or directly customers that buy directly from the farm, if we talk about smaller farms, how important that commitment for the next years is. If I can already know that I will sell my walnuts, I might plant a lot more, but it might take years for those walnuts to come to life. So access to markets for the produce during and after the transition, and access to markets for ecosystem services. Depending on where you are, this is very key. Depending on other places, it might be a small piece, but you see a lot of movements in ecosystem services. And if farmers can get paid for carbon sequestration, for water storage, for biodiversity increase, it's an extra to help speed up the transition. It's not going to lead the transition, I think, by itself, but it's definitely an important piece. And then, and only then, after we got the support in place and the markets in place, then we need the right type of capital. But if we only lead with the right type of capital, I don't think a transition finance in general is going to have a lot of sense. There are a lot of risks, not just if we only look at the right type of capital, but in general. The current generation of larger scale farmers is, first of all, close to retirement, which means they don't have many harvests left. They don't have many appetite for risks, rightfully so. They're not going to bet the farm. So that's something we need to figure out. They have huge indebtedness on their balance sheet at the moment, and most of them have very, very low profitability, meaning that they're not very attractive to invest in, honestly. So we really need to look at the previous slide, like how do we build vehicles, maybe with blended capital, maybe with better premiums. How do we build vehicles to make this attractive and make this interesting? There are definitely ways to do that, but it doesn't mean it's easy. And I think it comes down to this word, partner. How do we partner with millions of farmers? How do we partner with smallholder farmers in the global south? Or how do we partner in general with smaller farmers? How do we partner with current commodity farmers that are deep down the chemical input GMO street that maybe want to change? How do we partner? So I think we're going to see a lot of different vehicles, a lot of perennial funds, maybe thousands of different ones that are looking at different crops, looking at different locations, looking at different transitions, honestly, to be able to put money to work. And then skin in the game. What's absolutely crucial when you look at these pieces is that we need, as investors, to have skin in the game. The perennial fund is very unique so far, at least in that they have a profit share or flexible a profit share with the farmer, meaning that when the farmer makes money, the investor makes money. When the farmer doesn't make money, the investor doesn't make money. So this is something that doesn't happen very often in the farming world, doesn't happen very often, honestly, in a lot of real economy investing, but it seems to be crucial. We need to find ways, like the perennial fund did and like many others will do in the future, to really partner with farmers and to make sure that the investor and the farmer are on the same side of the table. If you want to dig deeper, we've done a full series, as I said, with Benedict as a co-host, so you can find the link here. There are up to 9 episodes. We really explore the farm of Benedict, and we explore everything from the role of ingredients from farm to fork, from transition finance, obviously on the farmer side, what could banks do, etc., etc. If you want to learn more about the Perennial Fund and how they lend money to farmers and then via a profit share get that money back and then hopefully make a return for their investors, you can find a lot more in the interview we did with them, which was part of the series. It's an hour and a half, super deep dive into why transition finance for farmers and partnering is so important. If you want to continue